So when we do our analysis, the first thing we do is we kind of step back and take a look at the insurance company's balance sheet. On the asset side of the balance sheet, we will question our companies and ask management teams, are there any formalized frameworks that your companies are using in order to assess ESG considerations? Are there certain assets that you are divesting of? Are you making assets investing in other areas of whether it be green bonds and what have you? And the point is not for us to necessarily link those to a specific credit rating, but rather within the entire holistic risk management framework, how do those ESG considerations come into play? Looking at the liability side of the balance sheet, it's a very different story because that's going to vary depending on the types of liabilities that insurance companies underwrite and what kinds of risks that they face. You look at a life and annuity company, for example, there may not be a direct correlation for climate risk initially on first blush, but if you start to think about it, and we've seen some research on this topic already, there are some emerging trends with respect to climate change that could affect mortality and morbidity over the longer term. And the insurance companies that are taking this into account now and thinking about that may have an edge with respect to how they manage these risks going forward, and it's something we want to take into account when we're doing our credit assessment.